Hey everyone, it's Tom Karadza with another Rockstar Real Estate Minute, and we wanted to talk about how to think about negative interest rates in Canada. So here's something that got our attention. First of all, what's going on is that the Bank of Canada recently did a press conference in which they shared that in an answer to a reporter's question, the reporter was asking about interest rates in the US and why is Canada talking about negative rates if the US is about to raise rates. And our Bank of Canada Governor, Stephen Poloz, I think you pronounce his name like that, made a comment that kind of scared me because I don't, these guys have tough jobs. I mean, they're working with a system that is really tough to manage right now, these central banks. And, but his answer kind of scared me a little. He said something to the reporter. He said, the US Federal Reserve would not raise rates unless they felt the economy was improving. And that scared me because it made me think he's either not telling his whole truth to that reporter, which I gather they can't share everything, or he hadn't read the minutes from the Federal Reserve's published meetings on this topic. Because the last minutes, if you Google up the Federal Reserve's Open Market Committee minutes, and if you look at the last minutes, kind of have them here in front of me, there's a sentence in here from the minutes that reads like this. It was also noted that a decision to defer policy firming, so a decision to defer increasing interest rates, could be interpreted as a signaling lack of confidence in the strength of the U.S. economy, or, and this is the big one, erode the committee's credibility. So these guys are sitting in this meeting talking about if they don't raise rates, one of the perceptions of that would be that people have a lack of faith in the confidence of the U.S. Federal Reserve. That has nothing to do with the health of the U.S. economy. So for our Bank of Canada governor to say the U.S. would only raise rates if the U.S. economy was improving, it sounds like he hasn't even read the minutes of the latest meeting. And I assume he has, and he can't share the whole truth. But in this crazy world, when interest rates in Canada could be going into negative territory, the U.S. is going to raise rates. Here's how we think you should be thinking about money. In North America, people think money has all the value, and then they think about what they can buy with that money. In Europe, because of all the different currency collapses in Europe, people think like this. They think of assets, and then they think of how it's priced in the current money system. So for example, in Yugoslavia, when the money was collapsing there, people thought, and our own cousin spoke like this, I have this car, and it's worth this many dinars, and it was like a, gazillion dinars because the dinar was collapsing, but it's worth this many German marks. So they looked at the value of the asset as a standalone thing and then priced it out into different currencies. So to them, they perceived the asset as having value and not the currency. In North America, everyone looks at the currency as the thing of value. When rates are going crazy like they are in the world, we think it's in your best interest. And it's why we like hard assets so much, to think of things and acquire assets and hard assets in your life, and then just comment on whether, it's cheap in Canadian dollars or expensive in Canadian dollars, or cheap in American dollars right now or expensive in American dollars. And the real thing of value is your hard asset, and it's just priced differently in different currencies. That's the mindset we think you need if you're going to succeed through this economic times. Until next time, your life, your terms.
It's supposed to be a minute.
Yeah. Did you get that?